The essence of Islamic finance is, in fact, doing business as usual. But doing business as usual, not in a distorted environment, in a normal, natural, realistic, down-to-earth environment. When it is done that way, that is what is the Islamic finance, doing business as usual. It is not usual to have increment in a loan or in a debt, because a debt does not increase. A debt is a notional, conceptual thing. It is an interpersonal relation. It's like love and hate. It's not a material thing that may grow or things may add up to it on its own. So the point is, doing business as usual, as natural as they can be, that is, make the financing not through the idea of increment over a debt. A debt must remain as it is, does not change, because by definition it does not change. By the same token, money in your pocket does not change. It only changes if you buy goods with it. You buy goods, then you sell the goods at a higher price. Whose price has increased? The price of money or the price of the goods? It is the price of the goods that have grown. And that then definitely you are entitled to that increment because you are the owner of the goods. So the same thing, Islamic finance is doing business as usual, on the ground, realistic as they can be. That is, doing Islamic financing, doing that, the financing not through lending and borrowing, not through increment in a debt, but rather through buying goods and selling them at deferred prices, buying goods or long-living goods, assets, and leasing them and get return on that financing, or go into ventures together with the entrepreneur, the financier and the entrepreneur, creating some kind of partnerships on equity basis. These are the three forms of Islamic financing that are discussed everywhere by Muslim scholars that make the foundation of Islamic banking today. The Islamic banking, on the basis of this form of financing, does not accept the idea of financing on the basis of loan. It has to be either buy and sell, or buy and lease, or share in a partnership, contribute as an investor in a partnership. Islamic banks is realistic in that sense. It is not anything that is new. It is as old as humanity. In fact, it is not the invention of Islam, nor it is the addition that Islam adds to the human culture. These forms of financing existed before Islam, and they continued, approved by the Islamic law. When we talk about the financing in the Islamic law, is financing by doing business as usual within a realistic environment, not based on assumptions. Now, when we make a debt to grow, when we add up an amount, suppose you owe me some amount of money and it is due on a certain date. On that date, you did not pay, and we decided to reschedule the debt. How in the world can we get that this debt would grow? It does not grow by definition, by its nature, because it is a conceptual thing. The only way to make it grow is to assume. Let us assume that you should pay me more. Let's assume that that increment should be certain percentage or certain amount. Where do we get them from? That's not realistic. That is exactly what we fabricated, and we thought it is real, but it is not. It is real only in an environment that is distorted, that accepted the assumption instead of coming down to ground and doing things as usual as they are in real life. In real life, a debt does not grow. A quantity of money also does not grow. That is the real life. And if we accept that reality, then we are in the realm of Islamic financing. We are doing no more, no less than Islamic financing. That is the tradition of humanity that is approved, accepted, and continued by the Islamic law, and rather it was even supported. Take the argument that is mentioned in the Quran on exactly this point. When the unbelievers of Mecca said that bay' is just like riba, إِنَّمَا الْبَيْعُ مِثْلُ الرِّبَى, then the answer came to them from Allah. Allah narrates their statement and then gave the answer. Did not say, you guys are stupid, sale is not like riba. Not at all. Well, it says, وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى, but God made sale permissible and interest or riba not permissible. Now, that means, first, we recognize certain similarities. Definitely that similarity is not in cash sale and riba, because there is no similarity whatsoever. If I buy a good or a house or a car and pay cash, where is the similarity with riba? There is no financing, there is no time element. So there is no talk about similarity. Then where does the similarity come from? It comes from sale that includes financing, not cash sale. Sale that includes a time element. And in a sale that includes a time element, there is financing. And that financing is not denied in the Sharia. The similarity is not denied. They are similar, but for God's sake, when you give a loan, the increment in it is unrealistic, because a loan, a debt does not grow. Whereas when you give the financing as goods, goods have different prices today and tomorrow and the day after. So they are not the same. There are similarity when you look at them as final product. Yes. Is exactly when you take a mortgage on conventional way or you take it on the Islamic way. The final amount you pay an installment, that is the same. But the paradigm you come from is different. That is the essence of the idea of Islamic financing. That it is founded on the paradigm that is realistic. A debt does not grow, then we don't allow a debt to grow by assumptions. Put it aside then. It is not a form of financing. A debt is a benevolent action, is a form of mercy, is an action of mercy, of goodwill. When I am asked usually, who is going to give you a loan, a debt? I always answer, your mother, because your mother loves you. And it comes out of love, out of benevolence. A debt is not a business transaction. Creating a debt through loans is not a business transaction, because it doesn't give you anything. Because in real terms, it does not grow. And if it does not grow, you can't make it to grow by assumption. We don't accept that. Come down to reality, there are similarities in the final product, but there are many dissimilarities also when you look at them from where do they come from. One comes from the idea of imposing an assumption over a debt, making it like other real goods that are affected by market prices, that are affected by their nature in grow, go astray, go wrong, go rotten, being destroyed, being demolished, etc. But a debt is not affected by all these natural effects. So it doesn't carry that all this nature. It's a different nature, is an interpersonal relation, and it does not grow. As simple as that. And we take away all these assumptions. That's what Allah subhanahu wa ta'ala refers to when He said that Although, as if it is saying, although there are similarities between sale and interest, there are also many dissimilarities. You need to look at them, and once you realize them, you realize that there is a good reason that sale should be permitted. Sale as a mode of financing, not cash sale. Sale as a mode of financing should be permitted, while giving loans and make them grow in the wealth of others should not be acceptable. I don't have any quarrel at all with the idea of having a rate of return on financing prevailing in an economy. And as a matter of fact, we always argue that when we have an Islamic setting, complete setting for the economy, there will be a prevailing rate of return on financing. There will be a floor for it, and there are other rates that are above that floor, adding other elements like risk, special risks here or there, like foreign exchange factor, like the factor of the size of financing, etc. There will be a floor for it, and there will be others. But these rates are rates of financing. They are acceptable completely in Sharia. But you should notice they are not based on lending. They are based on sale with deferred payment in any way, in any manner. It has several names, several forms, contractual forms, or lease. And also it has several contractual forms, and or sharing. Now sharing includes more risk, so the expected rate of return on financing should be higher. Each one will have that. Probably the least one among them, the least risky among them, could be leasing, although it has some risk. You see, risk is part of real life, and we cannot avoid it. The moment we say we want to completely avoid risk, then we go outside the real life. There will be definitely a floor rate of return on financing, and there will be other rates depend on the cases and other elements. When you establish the idea and say the basis of financing in the natural way, in business as usual, without being distorted by assumptions or by unrealistic also assumptions again, that natural way means that financing is done either through sale or through leasing or through sharing. Now, when it is done that way, we establish that principle. This is what it is, as compared to doing financing through a debt concept, giving loans and getting repayment back. Now, once you establish it, you need to draw the contractual limits of each of it, of each contract. Now, when we draw the contractual limits, definitely we will have to extend the area of sale, say for instance, extend it to all the elements, to all the individual items that are included in it. So when you put the boundary of sale will be very close to other transactions that are outside the boundary. So definitely when we look now at points at the two sides of any line that divides two kind of things. Now that one side comes to this sale, the other side is lending. Now definitely that points that are close to the line on the two sides are close to each other. But yet we need to draw a line. You can't make it without drawing a line. That is the nature of law. When you set the law, you have to set the terms. You put the line. And once this is drawn, then the argument that, oh, this point is close to the other one on the other side of the line should not be looked at without taking the context. But this point is still on this side of the line, so it belongs to this paradigm and not to the other, as long as it is on that side. So, therefore, when we say that, okay, financing should be based on sale, lease, or sharing, then come to draw the line. Is buying a house through conventional mortgage permissible as compared to the Islamic way, buy it and lease it, or buy it and sell it? Well, that is exactly where we draw the line. When you take a loan and finance the purchase of the house, it's a loan. These are two separate contracts. Here we have a loan, and here we have a purchase with the money you borrowed. Well, that is a loan, and that creates debt, and that is based on the paradigm of assumptions that it will increase, it will be subjected to certain market. But it doesn't have a market in reality. It's not a thing that is sellable because it's notion, it's concept. On the other side, okay, you take the financing through a sale contract that the financier would give you, would sell you the house at installments paid over 30 years. That is the rate of return that is done here. This is rate of financing that is permissible. Now the final outcome is similar, and this is exactly what was suggested by the unbelievers of Mecca, that, well, the final outcome is similar. I'm paying in the final analysis the same amount, whether to the bank or to the seller. Okay, but they come from different paradigms. One comes from the assumption that a loan or a debt may increase. The other one comes from the assumption that you come to reality, you own things, you can sell them any way you like. So we need to draw that line. And that similarity must not deceive us from the fact that when it is drawn, when it is contracted in the form that is based on sale, then it is sale. When it is contracted on the form that is based on lending, then it is a loan.